doing? I actually managed to stay awake tonight, so I thought I'd better use the time wisely and do a video, even if it's just a small one. Don't know if you can tell as well, but I've got another fucking cold. I swear to God, I've probably done 50% of my videos unwell. For those of you that have got kids, you'll probably understand that they are germ machines. We left off the last video, I think, and I think I said that I don't know if I'd started or said we'd look into this Angi. It's had a hell of a collapse. It seems to be slowing in its collapse, though, so whether or not there's potentially a sentiment change overall. No, not a change, but people are not so fearful of the price anymore. I don't know, so we'll have a look into it. Got the balance sheet up here already. I've already got it in the spreadsheet here. So basically see what we can see straight off the bat. I don't like this negative tangible book value. If you have a look on the balance sheet, the level of goodwill, it's huge. Goodwill and intangible assets are 1 billion of the almost 1.7 billion in total assets. Current assets are very good though. It's almost all cash. Pardon me, that's going to happen a few times in this video, I expect. Very professional. This here though, this is obviously their EP&E, and I don't tend to like leases. If you were to sell the company, generally they're not really worth anything. So it might be interesting to see whether or not we can break down what this is, in which case I'm actually going to open up a proper 10K. Because I'm going to do some sort of liquidation value on it, or reproduction value. I need to really know what the assets are. Like I said, they look, to me, this suggests that obviously some software that they own, which is clear because it's a, as you can see over this side, online marketplace that connects homeowners with home service professionals. So I'm guessing we got, this is obviously a US company. We got this sort of company in the UK as well, where you just search for, here, go down here, look. Search for contractors, compare ratings and reviews, get quotes for projects, book services online. So yes, it's very similar to the sort of thing we've got in this country as well. There's obviously a business model that's universal, and if it works in other countries, there's no reason why it couldn't work in, America. It's quite, when was the company floated? It goes back to 2011, so it's been around. It's been around. Maybe the buzz of the technology and all that's worn off now, I don't know. Let's see what we can find to see what this is. If there is a note to suggest. Do the taxes. Here we go. Capitalized software and computer equipment, so the bulk of their assets are in that. Leasehold improvements, so that's quite small, to be fair. Like I said, I'm not big on leases, but it is quite small, to be fair. So basically their equivalent of PP&E is almost exclusively software now. It's gone up in value. I don't like it. I gotta be honest, I don't like that straight off the bat. Effectively, as far as I'm aware, you've got like 300 grand in good assets. Let's say 1.6, but goodwill's just going to get wrote down. So honestly, I think already for me, this is a no. Especially when you've got $500 million in long-term debt. What's this then? What's accrued? What's other current liabilities? Let's see if it can tell us. Did it break it down? Leases. Here we go. Employee benefit compensation. So, what's that? Pensions and stuff, I'd imagine. It's the majority of it. 166,331. What was it? What was the total on here? Yeah, 166,331. Okay. Did it break down what it was again? Where are we here? Other. What's other? You know, almost half of that is other. What is other? It's very, back to that. It's very vague, isn't it? I don't really like that. No, just because I don't really like the look of the balance sheet. I mean, to be fair, I don't really like the look of the balance sheet. That is a no. Like, value investing, it leans towards no straight away. But it depends on what the cash flows are like. Apex is 59's gone up. Revenue's gone up. Let's have a look. Like, you don't mind if capex has gone up if earnings and all that have gone up. It hasn't. It's gone down. Capex has gone up. Pardon me. So let's just check that my data is correct. We have got 103 operating 59, and that's 59.6. Capex, and what have I got here? 105. It's close enough. So, simple free cash flow, 75 cents a share. It's effectively trading at 10 times, look. Straight off. That's on market cap. I tend to do everything on EV because the debt is very real. So on EV, 15 times. So for me, it's rich already. It's already rich. Was it Joel Greenblatts said he wouldn't pay any more than like 14 times earnings for something? Is that right? Or 16 times earnings? So you're basically up there already. I will just check the debt, see what the debt is when it's due. That's all basically all due at once in 2028, 2 years out. They got 300,000 cash on the books, but what was a simple free cash flow last year? Down here, 35 million was 70. So look at this. Went positive, went even better, and now it's half that this year. Payables have gone up. How fast they're collecting money is actually down overall compared to what it is historically. It's up year on year, but not significantly. But they are spending 15 days more on their payables, which I guess is not the end of the world, but obviously that sort of manipulates cash flow. There's a great book on that. Is it Financial Shenanigans of the... No, some Shenanigans of the Financial Markets. Really good book. I have said before, I should put a reading list together of stuff that I've read, which I think is good. I will have to get on and do it when I... So basically, I'm not interested. There's just nothing here that stands out to me. There's an insider, quite a prominent insider. This guy here, Barry Diller, is a billionaire, and he's got 11% of his portfolio in it. You got a CEO purchased 430,000. That was 172. So bloody hell. That's 2024. So he's well in the money now, and he's 739. 2024. When was it down that low? it wasn't. So that must have been like a compensation thing. So there you go. I think we basically said no to it, haven't we? Like I said, I'm trying to say no faster. We've waffled on a bit more than we should, but I'm not interested in this. There's nothing there that I like. There's nothing that jumps out to me. Balance sheet is not great. Yes, they got a decent amount of cash. This is software, you know. Is it software that someone else couldn't develop? No. Goodwill is huge. Intangible assets have actually shrunk, but this goodwill, not for me. Not for me. It's cash flow positive, right? And free cash flow positive as well. It just seems to me that it's probably fairly valued to, I don't know, maybe even overvalued. Let's ask, see if Grok remembers. I'm sure Greenblatt said that, what price, no, what was it? Yeah. What earnings multiple did Joel Greenblatt say that he wouldn't pay? I'm sure it's like 14 or 16 times or something like that. I have had it 15 times, yeah. 6 to 7% earnings yield, that's right, because I think his like discount rate is a minimum of 6%, but if interest rates go higher, he wants about 3% above. So yeah, earnings yield of 6.7%, 15 times. I'm sure he said 16 times, but it doesn't matter. We're not going to argue over one multiple. So we're looking at 15 times there already. 15 times simple free cash flow to EV. Earnings is appearing higher, so what's going on there? Operations 43, which is higher, isn't it? Yeah, 96 cents a share. So what's going on in the cash flow statement to get rid of that? 43, depreciation, credit losses, quite high. Those credit losses already have come down year on year. Stock-based compensations come down good, because I'm not big on stock comp. Receivables is going to be the working capital portion, is it? Deferred income taxes, there's a huge swing. Non-cash lease expense. Deferred revenue. Alright, anyway, there's nothing in it I like. We're going to move on from Angi. I feel like it seemed more promising than that in the last video, or whether or not I was just, I don't know. I mean, it's been higher. I can't really see how it's been higher. What's the historical free cash flow? 70, wasn't it? 70 million last year in 2024. So, around here. Even then, that seems overvalued, doesn't it? Share count decreased. Okay. Anyway, all right. Let's just stop looking into it because I said no. Holding company, vision of broadband. Where is it? New York. What's it? D? Delayed. Okay. Oof. 12,000 US dollars. I gotta be honest, can't afford that. So we're leaving that one behind as well. Sirius XM. I did this one recently, didn't I? It is in my tracker. Here we go. Tracker's on the other page. Hang on. Oh, done there. Here we go. Siri. Look. Just dragged it off screen a minute. Right, yeah, here we go. I didn't. Oh, I did 32. Okay, so how did I come to that? Because that's like a 50% upside. 2.4 times interest coverage, half a debt due. Oh, Berkshire's big in this, aren't they? Yeah. Possibly good refinancing. Half a debt due in the next 3 years. Can't fully pay it all, but earns enough free cash flow to get refinancing. Berkshire backing it is almost certainly going to get refinancing. Don't see debt as a problem. Possibly a hiccup without Berkshire's backing, but not problem with Berkshire's backing. Revs are reasonably stable, but have dropped. $25 a share in revs. %5 dividend yield was pretty good. So $3 a share. Free cash flow, trade less than 10 times free cash flow, 15 EV, likely due to debt levels. Here we go. So 15 times EV again. Refinancing the debt and pay down because the upside over the next 3 years, if free cash flow stays around this level. Yeah, so I'm still out at the moment then. Berkshire's thesis is likely a 5% dividend yield, so a good place to park cash. Debt pay down can unlock around 50% in equity value. If free cash flow can stay solid and debt pay down is good, then the multiple could get much lower. Alright, so we've already looked at Siri, I've already done a video on it. Maps, I've already said no to. Cannabis. Nomad foods, here we go. Here we go, this is something that I have. Hard assets for the value investors out there. I would assume it would have hard assets. Manufactures and sells frozen food. So, what's that? NOMD. NOMD. 20th. Where's that based out of? Oh, United Kingdom. Euros. Oh, fucking hell. Literally a third of assets is goodwill. 2/3 is intangible assets. PP&E 600. 800. Total current assets, there we go. Liabilities. So, I'm taking it they're not earning, they are earning profit. 136 million. That's not small, no small. 3 billion euros. Gross profit 823 million. Operating profit 325. Bloody hell. This video is going to be watchable, and it all coughing in the background. Some finance income, profit before tax, taxation. So 136. Right. What would the return on capital be on this? So Nomad, NOMD. Nomad Foods, right. NOMD. Nomad Foods. Put it in. Copy and paste, very professional. Deary me. Probably shouldn't be streaming because it probably sounds terrible and very unprofessional, but I do not get enough time these days to do this sort of thing, so enterprise value, fuck, 3 billion. Over double the market cap. Cash minus depth. Minus $13. Deary me, pardon me, man, this video is going to be well unprofessional. It's going to go out there nonetheless, but 25%, that's not bad. 7% earnings yield gives a 13 times multiple. 15, oh, there we go, sorry. Yeah, 13 times multiple. 10 times for the unlevered part of it, EBIT. So honestly, I don't know. Not interested in this really as well then. Look at that. It is a proxy, I guess, for a potential liquidation value, and tangible book is severely negative. Severely negative. I just can't get on board when it's that bad. Because this is worth nothing in liquidation, right? What's their brand? Like, I haven't heard of them, but they're not Coca. Like, the brand name is not going to be worth a lot, is it? Coca-Cola trying to sell their brand name is going to get billions for it. McDonald's are going to get billions for it. Nomad Food are not going to get billions for their brand name. There's nothing in it really already. Like, we have been trying to say no faster, so obviously that's what we've achieved again. You know, we are achieving the goal of trying to get through some companies. But don't know. Free cash flow. 254 million. What's the debt then? Let's have a look. If they got a debt schedule. Any goodwill? What's their goodwill then? We're not looking at the right thing. Let's get the actual 20F up. It's much better for detail. This, getting the actual thing up as opposed to looking at the shorter version of it. Right, goodwill 13. Okay, so where's note 13? Where's that going to be here? Brands. Yeah, I don't know. Doesn't really break it down, does it? Here we go, goodwill. Key assumptions. Right, okay, loans and borrowing, here we go. Non-current syndicated loans. So, what you can do, is this, look. Hopefully, right down at the bottom. Break, down this debt schedule for me and explain it in simpler terms. See if it can do it. Generally it can. Right. How much is there in total? Oh, hang on. 2 billion. Revolving credit facility, 165 million debt structure before refinancing. Total equivalent loans, 1.35. Uh, 2.2 billion. Total potential debt, 2.2 billion. That's what this tells us. Actual drawn debt minus unused revolver. Mostly unused. Mortgage, pay little every year. Pay little at the year, pay all at the end. Corporate bond, 800 fixed rate loan from investors. Right, does it say when? I just skipped through a lot of that, didn't I? When are the maturity dates? When are the maturity dates and for what amounts? It's 800 million 2028, 620 million 2032. It's quite a way away. 2028, 2 years. What's their cash position like, and what's the free cash flow? 200 million in cash. What was it? 250. Okay. I mean, they earned enough money to refinance that. Interest coverage must be reasonably good, is it? 2.66, yeah, good enough. Alright. I don't like the amount of goodwill and intangible assets. So I'm a no on this one as well. We will just see who owns it. Not that I'm trying to give it a chance. There's nothing going to be nothing on there, is there? Might not be anything on here as well. If it's not, what's going on here? Doesn't appear to be. Either it doesn't appear to be working, or it can't find it. I might have to. There it is. Don't know what working then. %, portfolio. Gnome Gottesman. Gnome Perpetual Capital Management, 10%. So there's a few people who are reasonably invested in this, isn't there? 100%, 10%, 8.99. Who's this then? Gnome Gottesman. Let's Google him. British American businessman. Former hedge fund manager and co-founder of GLG Partners. Restaurant industry, investing establishments. Oh. You billionaire? It's not that significant, is it, when I'm not interested? Just sold bloody 13 million shares. Noma Perpetual Capital Management. Attractive risk-adjusted returns. Value-oriented investment approach. Long-only equity securities. What else are they holding then? $13 positions. That's not bad. Sirius XM. 2023, 2024, Q3 2024. New finances. When was their first position? First own Q3 2025. They're definitely down on that. Ugh. Got NASCAR on in the background. Some few accidents in this one. It's a bit of technical analysis here. There's a channel that it's just tanking in it, right? Is there any news on why? Outperform, maintained overweight. Does overweight mean they think it's worth too much? Cut to 2 for, yeah. What does outperform mean? 13, they're both just doing it there. Maintained a buy on the same day. No, 15 from 18. There's nothing in it that I like again. Moving on. Wasting too much time on a Shutterstock. Don't spend as much in this either. It's a sort of semi-technology company, isn't it? SEC, oh, SEX. There you go. SEC, SSTK. NK, here we go. Financial statements, balance sheet. 178 million in cash. Accounts receivable, 112. So reasonable. What we say, 200, I don't know. What they collect out of that, 250 maybe in current assets. 310 in total, because you've got PP&E. Intangibles, goodwill. 700, over half of that, total assets, intangibles and goodwill. Accounts payable, accrued expenses, deferred revenue. Debt, 158. Long-term debt, 116. So they're not overly indebted. They've got a lot of liabilities, but cash flows 166,000 capex. So 100 what? I mean, that's a huge increase from last year. What did the revenues do? Went up. So what fucked them up last year? What fucked them up last year then if the cash flows is so different? Seller obligations. It's a huge thing, whatever that is. Business combination seller obligations. Prepaid expenses is flipped round. Look. Payables are down. Envato. Let's see what that's all about. Pardon me. Oh, fucking hell, there's completed the acquisition of Backward and Envato. The company believes that Backward expands Shutterstock's enhances. Okay. Right. New conversation. The reason why I do new conversations is because it saves your old conversations, so you can go back and look at them. So for every company, if you start a new conversation, it just makes it easier to find. Where were we? That was in here, wasn't it? Cash flows. Shutterstock's cash flow statement as an entry for Envato seller obligations. Explain what this is. of liability related to its acquisition of Invato. Okay. Evidence payment Shutterstock had to make Invato marketplace sellers after the acquisition closed. Okay, so yes, that's a huge difference. I said payables is up. So there's a difference in accounts payables. What's the difference in the balance sheet? Accounts payable up, yeah. So they slowed down some payables, which has made cash flow look a little bit better, just a little bit. They hadn't paid them last year. The year before that, there's a fucking, 61 million swing in payables. But a cash flow, it's not manipulation because a lot of people do it, but it is manipulation. It's a shenanigan, let's say, like that book. I can't remember what the bloody book's called. Shenanigans of the Financial Markets or something. Cash flow shenanigans. Just for shenanigans, there we go. Book. Oh. This area, financial shenanigans. That one. Good book. Yeah, Howard Shillett. There we go. Alright. So there's a huge swing there, but... Right. Let's just drag it in quickly, shall we? SSTK. I think this one's a no as well, but we'll have a quick look at the cash flow side of it. I don't know if I've got a Shutterstock account actually. I've used it, I'm sure I've used it. Metrics, here we go. I've got the price in, yeah. Return on capital's pretty good, 34%. Cash flow yield, not too bad. Even against EV, look. Negative that year. Simple free cash flow, 76 million. Down on some historical numbers though. Enterprise value. Not too far above the market cap, but it is $16 in book value minus 6 effectively. Intangible book value, not a big fan of that at all. $27 in revenues, it's trading like half of revenues. Gross margins down. Share accounts stayed reasonably consistent though, that's good, I like to see that. Well, I don't like to see that, I like to see it coming down, but at least it's not going up, is what I mean. 216 a share, yeah. So 10 times multiple would have it, 21. When's this debt due then? Cash minus debt, negative $4 a share. So yeah, 10 times EV. Right. Debt, here we go. Current debt, revolver, term loan. What was the total amount of debt? 166, 150, there's not a lot of debt. Not a lot of debt. 300 something million, although look at that, it's gone up significantly actually over the past few years. Okay. Here we go. Oh, fucking hell. What was the conversation about Shutterstock? Right. Oh, come on. The thing is, like, you could read all this stuff and figure it out for yourself, but speed is the key, apparently. So the more you can get something to explain it to you in simple terms better. Then just get priority repayment over junior creditors. Is it senior? Senior unsecured. Unsecured. Okay, 375 million here. Borrowing capacity is 250 million in a revolver. Special components of the facility. Large banks issue letters of credit for guarantees, landlord security. Word revolver is shown as a current life, even though it matures in 2029. Accounting rules classify it as a current because the company can withdraw and pay at any time. Yeah, okay. Financial covenants, leverage ratio, net debt divided by EBITDA limits how much money the company can carry. Interest coverage. They're using EBITDA for interest coverage. That's interesting. I don't know if that's a common thing, but it doesn't take into account capex, does it? What happened to the old facility? Yes, they refinanced. Moderate leverage, mostly revolving credit. I mean, go on, explain it a little bit more. It's only 10 times more. It's 10 times multiple, which is obviously below the 16 threshold, but it's still quite expensive, especially for the potential for the write-downs of goodwill and intangible assets. Acquired in Vita mid-2024 for roughly 245 million net of cash acquired. Immediate funding for the purchase price, working capital for the combined business, liquidity buffer after closing the office. 100 million was too small for that. New amendment, revolving credit facility, total borrowing capacity. This provided 3.75 times more borrowing capacity than the previous 100 million. Flexibility for operations, integration. My company's upsized credit facilities before acquisitions. Didn't fund the deal entirely with debt. A significant cash on its balance. Came with cash on its balance sheet. Keeping unused capacity. Okay. Banks like Bank of America typically lend to companies with stable recurring revenues. Shutterstock fits this profile, which it does. We had a look at that, didn't we? Pretty decent, slowly growing. Actually, oh fuck me, they are serial purchasers, acquirers. That was the word I was looking for. Alright, anyway, that's a no for me. I think it's just fucking look at this. August 2022 is like $120 a share. There's nothing in that to me. What was Seeking Alpha saying their peers are? If they've got any. Getty Images, yeah. Okay, Getty Images. Warner Brothers. Okay, so the only one there is Getty Images. Which is worth less and has much higher enterprise value. I have got a comp page so we can, let's do it. Delete that one. What was the fucking ticker? Getty, of course it is. Getty Images. Right. Let's put this in the comps. I just want to see what multiples they're trading at. Oh. Right. Cover page in it. This one here. EV to sales. Should put in the third one, so next we shall have it. There we go. Gross margin's better. Operating margin's better. Net income's negative. Operating cash flow margin less. Simple free cash flow less. EV less. Interest coverage, fuck me, they're done, aren't they? If interest coverage is that low. 0.0, well, I mean, it's positive. 78% of the capital structure is debt compared to 35, so Shutterstock's a much healthier company on the balance sheet. I've got one here, there we go. Tangible book value, tangible book value. Yeah, we'll add something there. Multiple fucking hell. Hang on. That'll bug me if I leave that. There we go. So they're separated. Fucking hell, look at that. 270 times EV. The debt can't be that high, surely. Cash minus debt minus free. What's the enterprise value? Fucking is. That's not like, how would you use that as a comp? Make Shutterstock look like a brilliant company. Oh, I don't know. That's a no. Again, we're a no on this anyway. It's just not cheap enough for me. And the goodwill, like, no. Have a look. Payables have been increased by 50%. So that's holding some more cash. Slower collecting. What the fuck's this? Where were we? Here. What's ICLR? Clinical research organization. That's not my side, not my cup of tea. Simply good foods. Oh, look at this, look. This is a nice come down, isn't it? Another food one that's gone down. Let's see what's going on here then. SMPL. I see, no, I want this one here. There we go. SMPL. I'm gonna go to bed in a minute. I've got work tomorrow. I'm fucking knackered. Let's have a look at the balance sheet. Cash, accounts receivables, inventories. Where are we looking? Where are we looking? This one here. Shut that one. We don't need that one. Nutritional food and snacking products, protein bars, ready-to-eat drinks, shakes. Okay, so potentially been about for a while, mine, but gonna be a bit like fashion in or out. You know what I mean? Intangible assets. Half of them again. Intangible assets. Almost 1.9 billion. Severely negative fucking. On me. Almost 1.9 billion of the 2.5 billion in assets. Intangibles or goodwill. What brands do they own it? Let's have a look. Explain. Simply good foods to me. Ticker SMPL. Quest Nutrition, do we know that? Atkins and Quest Nutrition. No, I don't think I know Quest Nutrition. Looks like we're going to be turning off at the right time anyway. You can ask a lot less questions on ChatGPT lately. I'm not a fan. So I got Grok up. I've majoritively moved to Grok, I would say. I might even end up putting Grok side by side with this as opposed to... I like running the AI next to this so I can literally cross-reference, and anything I see I can ask. This is a good thing about Google Chrome, is that, I don't know, I honestly don't know if other people do this, they probably do, but the fact that you can run pages side by side on the same screen, I found that quite helpful. I only recently discovered you can do that. Probably only been in my last like 3 or 4 videos. Long-term debt. Yeah, it's not too bad though, is it? The goodwill shit. So you would have negative tangible book. So I'm not a fan of that. I'm never a fan of that. The cash flows, there we go. 50 purchase property plant equipment. I mean, this is a quarter, isn't it? 3 months. What I might do then is just get the last 10k up, just to see what it was like. So look at this. Do you know what I haven't done? Fucking haven't done again. Is put into my tracker. Don't want the amended one. That's not an amended one, is it? That was the proper one. I haven't put any of this shit that we've done today in my tracker as well. I need to do it just so I can go back through and be like we have done a couple of times in recent videos, gone back through stuff I've already wrote. All directors and executive officers, around 9%. That's not bad, you know. I mean, it's majoritively free of them by the look of it. All of these are under 1%. Star generally means. Right. There's 10k. Here we go. Interactive data. Financial statement. Cash flows. Acquisition in there. Made a big acquisition. And your earnings went down. Very good. Good acquisition has paid off so far. Impairment straight away as well, look. So that acquisition's gone well, isn't it? Still about 100, what's that, 158? How many shares are outstanding? 100. Just over $1. Okay. $1.5 a share. So even at 10 times value, look, 10 times earnings, you're around about fair value. Considering there's no book value or tangible book value as well. Trading at around about 10 times earnings. Let's put it in again. We'll see. Right. We'll just drop this in here quickly, and then I will call it a night. What was the fucking company again? SMPL. SMPL. Get data. Right. Problem is, right, 90% of my videos have been finding nothing, and I know people probably want to watch finding things, but this is the reality of what the fuck's happened here. What's going on here? Some of the data can't be right. That's why. Why I put the wrong fucking thing in. Didn't even check my sheets were right. My balance sheet. No, yeah, like people want to see, oh yeah, what are you finding though? What are you buying? And it ain't like that, is it? You got to find like Monish Probright. He says he's happy if he finds like 1, 2, possibly be ecstatic if he found 3 businesses a year. So you're going to spend like all that time finding nothing, saying no to everything. Which, when you speak to every value investor, is the game, isn't it? It's what you say no to is what actually earned you the money. Yeah, 10 times earnings. I'm not interested, but I'm just not interested. 115. I said they've had a fucking write down already from an acquisition that only happened last year. Let's have a look and see what they say on the impairment. Imagine having an acquisition and having to impair it straight away. $60.9 million, 52 is further note 5, goodwill and intangible assets. Is note 5? Where's note 5? Oh, here? With the result of the acquisition method of account related to the own acquisitions described in note 3. So we'll jump around again. There were no changes in the company's goodwill. Where's note 3? Just up here somewhere. Here you go. Company wholly owned subsidiary entered into purchase agreement to acquire Owen. Fucking made an acquisition. How much did they pay for it? 280 million. And you've already wrote off already had to write off like fucking 60. Is it 60? I don't know if impairment's on this one. This is a bit basic. There it. 61 million you've had to write off already from a 280 million acquisition in less than a year. When did they purchase it? August 2024. What is the date of this fucking document? A year. So a year, look. Great work. Moving on. Airlines. Interesting. Right. We'll probably get onto this one in the next video. We've done an hour. I need to go to bed because I got work in the morning. I'm gonna have to go back through. I had to rewatch this video and fucking fill out my tracker because I've not done it. Things like this one here, it's gonna be good knowledge to look back on and know that they've basically done a bad acquisition. Which is a bad acquisition, isn't it? Because didn't revenues go down? Made an acquisition. Yeah, revenues went down. Revenues went down, costs went up. Yeah, there we go. All right. Once again, we found nothing. Same as every other video, but like I said, my whole point is to just try and give like a insight into my journey. You're basically watching my journey because at the moment I haven't got any time to do anything outside of these videos, unfortunately for me, because I love doing this. Love analysing businesses and all that. I'd love to do it for a living. I don't know what I'm doing. And this was hopefully, if I end up being successful, a blueprint for someone to go back and watch and say, oh, this is how he did it. And yes, it's fucking boring. Yes, you're not finding a lot of stuff. But the stuff that you hopefully find will hopefully be, you know, gold mines, effectively, that could fundamentally change your investing, you know, experience. So we'll see. very, very much for watching. If you've made it this far, I need to start putting more videos because I've very clearly been dropped off the algorithm when you see like the view numbers on what my videos were when I was starting out and what they are now. It's just life has got in the way. Here's what it is. I wouldn't change it because some pretty good things have happened in my life outside of this. So I would like to get back into this a bit more, and I do. So hopefully I can start putting up a few more videos, especially if I can try and stay awake in the evening. Thank you to England Rugby for keeping me awake and then making me all depressed at the end when you lost right at the end of the game, but I would not have stayed awake long enough if it weren't for you. So that's the reason why this video came out today, too annoyed to go to sleep after England lost. Yeah, anyway, thank you very much for getting this far. I don't know what I'm doing. You should know that, so basically don't listen to anything I say. Like and subscribe, and I'll see you on the next one. Thank you very much. Goodbye.